Howdy folks, welcome to the Daily Coin. My name is Rory and today is Thursday, January the 11th, 2018, and I have the very distinct honor and great pleasure of welcoming back to the show Mr. Lior Gantz, and you can find all of Lior's great work over at Wealth Research Group. Lior, welcome back.
Thanks for having me, Rory.
We have a lot going on for just the very first couple of weeks of 2018. We've got gold and silver making moves that not really unexpected, but it's still nice to see. And we have inflation is rising at an exponential rate, even though they try to convince us that it's not. And we have where I want to start is with this announcement by China on Wednesday about the bond market and their desire to either slow way down or eliminate their bond purchases altogether. And what do you make of this announcement, Lior? Is this what's going to happen with that?
Well, obviously, Rory, the big thing here is that they're starting to play an open game of negotiations with the United States government with regards to how much they're willing to pay for treasuries, the duration that they're willing to hold treasuries, and how much interest rates they're looking to gather and yield from interest from bonds. So for the past 30, 35 years, what you've seen is that China has been a huge holder and accumulator of treasury bonds. That has played into both countries' hands. The United States gets to issue cheap credit into the world. China gets to have the United States as their largest debtor and build a monstrous industrial economy, becoming one of the largest and most successful economies in the world due to the fact that they can own the safe haven of treasury bonds, where they know that if they own it, the U.S. will keep on being a good friend to them in terms of commerce and trade.
Right.
But now, obviously, Donald Trump is not the mainstream president that they wanted. Obviously, a Hillary Clinton in office would be much easier because you know exactly who she works for, who the interest groups behind her are. She brings all of the same ideas that all the presidents between Nixon and today have brought, and that is more globalism and an inflation of the dollar for the benefit of the rich at the expense of the middle class and poor. And now you have somebody who's a Trojan horse or somebody who's a Pandora box. You don't know what you're getting. In other words,
right.
no historical views on politics. A business-minded person, and when you have that, you're thinking to yourself, as China, just put yourself in their head, Rory. You're thinking, okay, this is the time to renegotiate everything that we don't like, because we got a new president. He's not the same president as we thought we would get. This is not the same policy. That means that the U.S. voter has changed and is willing to accept changes. Let's start by tackling the big whale in the room, which is the fact that we own about $2 trillion worth of U.S. debt. And obviously, China is not going to stop buying altogether. They're not going to dump it. It's not beneficial to them as well. If
right.
you owed me $2 trillion, and I expect to get some at least the principal back, then I would not be trying to shake the boat. But in public, I might be trying to scare you. It's the same as a margin call from your banker. Obviously, he doesn't want to do something that is detrimental to the money that you owe him, but he wants to make sure that you're definitely on the right page when it comes to paying it back.
Right.
So, technically, around the world, if you take a look at U.S. Treasuries, they are breaking out of a 35-year trend line, and it looks to me like they will start heading higher. The Fed funds rate, what the Fed calls and determines, is the synthetic interest rate for the economy. That is not the real interest rate. The 2-year and the 5-year and the 10-year and the 30-year bond, those are the free market forms of interest rates that we get on a safe haven. The 2-year is yielding 1.97 right now, and the reason you want to know this and you want to watch this like a hawk is because this determines many things, and I'll tell you exactly what this means to retirees, people approaching retirement, and just in general people in the U.S. So the 2-year bond is 197. That's the yield you're going to get. The S&P 500 right now is yielding 1.75. So that means the next correction for the stock market, instead of buying the dip, most pension funds will go and buy a 2-year bond. So even if China stops or takes back what they buy in bonds, there's still a huge demand for Treasury bonds because now they yield more than the S&P 500. And let me ask you something, Rory. If you were a fund manager for a pension fund and you want ultra safe returns, and you can go into the stock market, which you know is trading for all-time highs, and get a 1.7% return, or go to the U.S. government, where you know they can print anything they want, basically, and get 1.97, where would you go? It's the same inflation rate. And so most institutions will go for the 2-year bond. The 5-year bond is yielding 2.34. Now you're getting a real difference, like a 0.8 of a difference between the S&P 500 and the 5-year bond. And so what you're looking at right now is how the end to a stock market bull market looks like, where bonds yield more than dividends. So the next correction, you're not going to see people buying back the dip as much as you've seen for the last 8 years. One thing that's important. Second thing that's important is when the synthetic interest rates, so what the Fed determines, which is between the 75 basis point and 1% right now, if you see that increased enough to where it's yielding more than the 2-year bond, that usually signals the end to the stock market bull market, and it means that in about 1 to 2 years later, we're hitting a full-blown recession in the U.S. Go back in history, check every time the Fed is tightened. That is exactly what happens when the synthetic interest rates go past the bonds, the Treasury bonds. And so with 4 interest rates hikings in 2018, if they raise it to 2%, then they're going to be at that situation where their interest rate, their synthetic interest rate, is more than the safe haven bond, and that is huge to bonds. And so if bonds continue to rise, it's going to take more time for the Fed to get there, and we're going to see the stock market rally on and on and on for more than 1 year or 18 months. I know it's hard to believe, but no one thought that it would rally for 8 years. So obviously, that is one of the most determining factors. Wrapping this up with a larger point of view, Roy, the end result of what's going on right now is a move away from the U.S. dollar as a global reserve currency, and a move away from the U.S. as being the veto power over major world events, and a move into a world where there's other superpowers that are determining how things shape in this world. So I think it's a monumental shift, and people need to be prepared. And for your listeners especially, I created a report about the crash, about how to prepare, anticipate, and even profit from what's going on at wealthresearchgroup.com/crash. And you can obviously go there and download. And we will be focusing on this in a major way and watching this like a hawk in the newsletter in the next year for sure.
Yeah, and all of your reports are free, just so people are aware of that. And what you produce is an outstanding research. It's class, no joke. You mentioned inflation a couple of times in there, Lior, and if the bonds continue to rise, and that buys the Fed more time, won't that would what impact on inflation would that have? Would that send inflation higher? Would it send it lower? Have no impact? I mean, the first thing I'd like to say is that I pay more attention to what John Williams over at shadowstats.com has to say about inflation than I pay any attention to what the mainstream media or any of the government statistics say about inflation. I think that I don't believe what the government has to say about inflation. I think that it's much, much higher than what it is. But how would the impact on the bond market continuing to rise, what impact would that have on inflation?
Well, let me ask you, if you're either an institution, a corporation, a small business, or an individual, and your banker calls you and say, hey, the Fed is raising rates. Well, we're going to have to raise rates as well soon. Do you want to, I know you wanted that dream home. Do you want to take out the mortgage now or in about 6 to 8 or 12 months when the interest rate will be about 1 to 1.5% to 2% higher? And so this is the pressure that raising rates puts on an economy. Counter to what many gold bugs have shouted out over the last 8 years, that easing and accommodating brings inflation, which is not true. It helps deleveraging and deflating the system because you're creating cheap credit, and all it does is goes into the higher echelons of the economy and doesn't trickle down to Main Street. Because if I get free money, I'm not gonna lend it to you. I'm gonna buy a treasury and make an arbitrage. In other words,
right.
If Bank of America or Citi or any of these banks get money at zero, and they can go back and buy a bond for 1 or 1.5%, they'll do that all day long. And if I'm a corporation, like the CEO of any of the S&P 500 companies, and I can borrow money at 1% and buy back my own shares, raise my profits per share, and get my stock rallying, I would do that instead of hiring, raising wages, etc.
Right.
And so that is a very deleveraging situation when you accommodate. When you raise rates like you do now, you are in a situation where if you mismanage this, inflation can really make a runaway move. Right now, depending on who you read, it's between 1.5%, 7%. I know John at Shadow Stats says that it's about 10% right now. It doesn't matter. You buy anything, you see that prices are rising.
Right.
Not astonishingly, but it's obvious that inflation is more towards 3 to 4% than 1.5%. But it doesn't matter. All that matters is how people feel about inflation, and if they feel that by saving they're losing, then they're going to start spending and borrowing, etc. And this is what's going to start happening. So yeah, in 2018, I do see inflation rates rising. I do see. We already see industrial metals rallying, but we will see the hybrid precious metal, industrial metal, silver rising. In my opinion, to over $20, maybe over $22 per ounce by the end of the year. Gold could be around $1,400 by the time this year ends, and this is a positive move for the miners as well, for the junior mining sector, because this confirms a renewed bull market, this confirms that exploration budgets can increase, and takeovers by large caps to small caps can start happening. And this is very bullish for the entire ecosystem. In fact, um, if you look at the best sort of situation right now for a junior mining speculator, it is to look at the most mining friendly jurisdiction in America, Nevada, where four out of every 5 ounces are produced. And then you look at who is going to make a lot of takeovers in the next few years when the market is cheap, and create a lot of increase in production. And then in 5 years' time, these companies that are making acquisitions today, when other companies are coughing blood and trying to remain afloat, those are mining companies that are now small 100, 200 million market cap companies that can be in the tens of billions by the time the cycle ends. So we're looking at a company, Rory, right now that is called Fiore Gold. It's the same management team as Hive Blockchain Technologies, the company that Wealth Research Group was among the only four newsletters in the world to cover since day one. Company has had the most successful IPO in Canada's history, and now they're looking at Hive is a pure blockchain miner, and Fiore Gold is a pure Nevada aggressive acquisition play. If you want the full research on it, by the way, you go to wealthresearchgroup.com/gold 2018, and you can check that out. But that company is producing about 37,000 ounces a year of gold, and they're looking to increase that to 150,000 ounces a year. If you look at companies that are producing that, then you'll see they're trading for about $1 billion market cap, whereas Fiore has about a 100 million market cap. Huge upside potential. Probably the best team in the business when it comes to making acquisitions and building shareholder value. Same people behind Lithium X, which went from 3 million to 265 million in 2 years, and same people as behind Wheaton River, that was incepted in 2001, and by 2005 was sold to Goldcorp, which then went on to become the fourth largest producer of gold in the world. So there's huge potential with the right type of companies. I think copper will also be a huge performer this year. Wealth Research Group for 2 years has looked for a copper play, and we finally found one 2 weeks ago. A very tiny company, but Wheaton Precious Metals, which is a huge $10 billion mining company, took a huge position in that company. It surprised the entire market, but since it's a newly listed company, nobody's even heard about it. It's called Cucho Copper, and you can go to wealthresearchgroup.com/inflation for the full report on that company. It's grossly undervalued right now, and I have personally made it a large position in my portfolio, as well as Fiore Gold. So if you're underweight gold companies, like many people are, that is a good place to consider how to start. I mean, for about a year and a half now, most of my gold portfolio has been shorting the ETFs, even the triple ETF for the gold miners, and then on the flip side, dollar cost averaging my best and most and top quality plays for the time then that this market turns around, and that has been profitable because on one side the market sucked. It was very bad. And so shorting it was a good idea. But on the flip side, the top quality companies did not falter with the entire market because they have a very steady shareholder base. And so you were able to dollar cost average there without panicking. So I think that is something that is very good for a cyclical industry like mining.
And speaking of mining, as you know, Lior, I just interviewed Tim Warman, the CEO and director over at Fiore Gold, and the way that he was describing the company and the acquisitions that they have on the table and what they're looking at and how the direction that they're going to grow the company is really awesome. And I compared it to what Keith Neumeyer is doing with First Mining, and that the way that it's really a microcosm. What Tim Warman and Fiore Gold are doing is really a small scale of what Keith Neumeyer and First Mining Finance are doing. Same thing. It's the same business model, and it's really you can't beat it. And I think that what they're gonna the position that they are going to put themselves in over the course of the next year and a half is going to be unbelievable. It really
Well,
that's
i-
just what I see anyway.
if you're already talking about it, I'll just mention briefly that I had a conversation with Keith not too long ago, and he's thinking about big things for First Mining Finance. But the major difference between them right now is that Fiore Gold is already producing, and
Yes.
First Mining Finance is an optionality play at this point.
No, I
So
understand. I was just saying
yeah,
that what
they're both
their approach,
aggressively accumulating
right,
proven properties in anticipation of what's going to happen. That
right.
is very accurate.
The M&A, the mergers and acquisitions that are lining up right now, because the large scale mining companies, they're running out, and they know it. And in order for them to maintain their position, they're going to have to start acquiring all of these companies, all of these mines that are out there. And so people like Tim Warman and Keith Neumeyer and a couple others, not too many, that are putting themselves in these really great positions. Man, they're going to look out. I mean, by 2020, 2021, good Lord, they're going to be, don't even want to say. And speaking of gold, how do you see 2018 playing out for the physical metal? Do you think it's going higher? I mean, you said you were thinking somewhere around 14. How are we going to get there? And you said silver 20 to 22 by year's end.
Well,
What are you
I
seeing
think
that others aren't?
well, the first thing that's important to understand is that in terms of geopolitical events and in terms of populism, we're reaching a point where the U.S. cannot endure a recession right now socially. The wealth disparity, the wealth gap, the emotions of people under the surface. They're not telling, they want to be politically correct, but under the surface, people are absolutely furious with the fact that the rich are getting richer for 8 years straight while they are not seeing even a little bump in their wage. They have to work 3 or 4 jobs part time to get the same income as they did in their middle class job just 15 or 20 years ago.
Right.
And they're not seeing their family. And so behind the surface, I know unemployment rates are very low, Rory, but that's because 100 million people are not working.
Right.
So the participation level is just not there.
Right.
Obviously, with about 70 or 80 million people approaching retirement or in retirement, you will not see a lot of people working. But those retirees, most of them are not sufficiently equipped in terms of savings to stay afloat for 20 or 30 years. And the United States government cannot afford to pay people to live until 100 or 90, which is what people are starting to do now, because the largest population growth is in the centenarians, the people that are over 100. So the bottom line is geopolitical events right now, anything can trigger a huge problem. That's one thing. Populism is the second thing. The end of the deleveraging phase of this cycle is clearly over. Consumer confidence is very high right now. Small business confidence is very high. And, overall, you're already after a 50% correction in the price of gold. It bottomed at 1,052 exactly 2 years and 2 weeks ago. It's not going back down within this cycle, and the cycle has just started for it. It's only up 30%. Have you ever seen a gold cycle that lasts 30%? Obviously, no. Now, when you look at how much of the currency supply it covers, gold only covers about 7% of the currency supply. That's highly low for even the last 46 years of fiat currencies. And so, if you just think that it should be about covering at least 15 to 20%, then you're talking about a gold price that is triple the price it is today. And that's one of the reasons that Ray Dalio, the largest hedge fund manager in the world, has piled in big into GLD ETF in Q2 and Q1 and Q3 of 2017. He's now the sixth largest holder in the world of gold ETFs. Now, his fund returns about 21% a year. So if he buys gold at about $1,250, the price that he paid, 21% from that is about a price of $1,500 for gold. So that's where the smartest person in investments thinks that gold is going. Even if he's wrong and it's headed to 14 or 1450, most of the uneconomical projects in the world right now for gold are very economical at 1450.
Right.
And so you're going to see a large rally in the junior miners after about 7 years of massacre, a bloodbath, nothing short of a bloodbath for these companies. And yeah, I think gold is headed higher. Just to make something clear, I own gold and I own silver. I own them in about 4 continents inside of vaults. No way am I ever selling my gold. It always remains at about 5% of my overall net worth, and I do not expect to become rich from it. The only thing I care about is if there's a real crisis, I own gold and silver. And if you want to become wealthier or richer, if you want to make money from that, you got to trade it. You can't buy the physical ounces of gold, which is an alternative currency. When you buy dollars or euros, you don't expect to become rich from doing that, and you shouldn't expect to do it with gold and silver. It's not the point. The point is an alternative currency with no counterparty risk outside of the banking system, totally owned by you. You can go anywhere in the world and change it to a fiat currency. Everyone accepts gold and silver. And so that's the point of it. But if you want to trade it for large gains, you got to come in at the worst possible sentiment for gold shares and do that. If you don't want to do that at all, if you don't trust any paper vehicle at all, then what I need to tell you is this. If a given stock is trading for $1 and the dollar zeroes out tomorrow, goes to zero, obviously not going to happen, but just hypothetically, your stock is not zero. It's $0, but it's still going to be priced at another currency. And if there's not another currency, then if all the currencies in the world are wiped out, it's going to be priced with something else. When you own a stock, you own a piece of a business. That business has machinery, people, talent, etc. That is worth money. Whether or not you measure that money in US dollars, euros, yens, or in real estate. So it's just important for people to understand. If they own $100,000 worth of Microsoft and the dollar zeroes out tomorrow, their position is not gone.
Right.
It's just gone in terms of the measuring stick.
Right.
Which is the US dollar.
The value of Microsoft is there. Changed.
Exactly. So. Exactly. And so the riskiest asset in the world is anything that is just cash dollar or a bond in dollars, because that's people owing you dollars. That is not something that you want to be part of. It's a guaranteed loss.
A guaranteed loss. That's what we want to avoid.
Exactly.
There was somebody that said that.
About that.
There was somebody that said, don't lose money. I think it was Buffett, maybe. I don't know. Somebody said, the number one rule of investing: don't lose money. And this is last question. Cannabis.
Cryptocurrencies.
Cannabis. Cryptocurrencies are fine. I personally, I would rather stay focused on value, and I think that what's going to add value to people's portfolio in the future. And I'm not a financial advisor. I'm not giving you financial advice at all. But what I see is that change that you were talking about, the geopolitical change, the populist change, the people seeing behind the curtain, if you will. And one of the major uh, themes that kind of was overshadowed in 2017 was cannabis, because cryptocurrencies stole every headline out there. But behind cryptocurrencies, cannabis was growing and growing and growing. And as of July 1st, I believe it is, it's either June 1st or July 1st.
In Canada, it's July, yeah.
Yeah, Canada. The entire nation will be marijuana, cannabis will be decriminalized, and they're not going to be able to supply the demand that it's already projected to be. So I know that you like cannabis a lot as far as as an investment vehicle. Give us
Yeah.
what you're seeing in 2018 and beyond.
Well, sure. And if you don't mind, just because cryptocurrencies have been such a controversial topic, let me address them for 1 second
Okay.
and say this. Um, any comparison between gold and any of the cryptocurrencies is ludicrous and should not be made. None of them are 5,000 years worth of social tradition and social acceptance. None of them are commodities. None of them are hard assets. And what they are, all of them, are incredible speculative vehicles where if this revolution, this renaissance in the way we transfer value and the way we move money around and the way that we can store it electronically, if this revolution persists and has a large acceptance worldwide, then some of these projects that are right now, under the radar and even not under the radar, but accepted in the inside of this community, they will become world famous, and people that are there early on would make a huge fortune. But 95% of them will be zeroed out, just like in the NASDAQ bubble. In other words, all cryptocurrencies and all of these projects that are based on the blockchain are the same way as NASDAQ companies were based on the internet. The underlying technology will obviously be around, but if you want to make a fortune with this, and Wealth Research Group subscribers have done incredibly well with cryptocurrencies. Bitcoin at 400. We covered Bitcoin 400. We covered Ethereum at $12. It's over 1,000. We covered Ripple a month ago at 27 cents. It was over $3 a week ago. We covered Litecoin at $20. It's over $500. We covered Monero at $19. It's over $500, etc. So people have been, sending me snapshots of a cruise that they bought or 3 months of mortgages that they paid, etc. And I'm happy to see this. Delighted to see this from our subscribers, but it's important to understand that the way we view them is the way you view startup companies. So we look at the management team, or what we call the core developers, the core people behind it. If we think that they're talented enough that they solve a real world solution, in other words, a real world problem, then they might be there in 2 or 3 years. But in general, you really need to be very, very, very careful. And therefore, we only speculate with small sums, and we only cover the absolute best projects, and we stay away from the rest of these projects because, just like in the NASDAQ bubble, very well-intended people, but lack of talent and lack of a real competitive advantage for your project, it's going to go away. It's going to be wiped out. So that's where I'm at with this. By the way, if there are people that are interested in cryptocurrency speculation in your audience, we just released our top 5 for 2018, and you can just hit wealthresearchgroup.com/top and the number 5. Moving on to cannabis, I think cannabis has a guaranteed hyper growth stage in front of it, because all of the illicit market is just going to turn into the legal market.
Correct.
That alone will have the wind at their back for at least a decade. Just 3 days ago, our top company, Invictus MD Strategies in Canada, had a 32% move in one day and then another 20% move in one day just because of the Sessions effect. So in other words, Jeff Sessions shaking up the boat in the US drew all this money back to Canada, all the speculator money back to the Canadian stocks that only deal in the Canadian market, like Invictus MD. And so, in 3 months since our alert, that company has already doubled. We are now looking at 3 new opportunities within the cannabis sector that are currently either private or very, very under the radar, and we're just finalizing our research, and we'll cover them in Q1 of 2018. But the underlying thing is this might be the biggest opportunity in the stock market, bar none today, cannabis, both for medicinal and for recreational use. And the reason is, cannabis demand is almost as large as alcohol demand.
Yes.
Not many people know this, but if you count the illegal market, it's huge. Now, when you make it legal, you allow a lot of pharmaceutical companies to do some research and development and find many new products, regulated, high-quality products, where you know exactly what you're taking for back pains, for stomach, for oils for your body, for sleeping relief, and as you know, this is very, very natural, and we are in a very powerful trend of organic and natural. This thing can really be the most successful industry in the world in the next 10 years, along with electric vehicles. So many new opportunities coming in 2018. And personally, I am increasing my allocation into the sector by about 50% in 2018. Yeah.
Yeah, I think that it's, like I said, cryptos kind of took all the thunder from the cannabis industry in 2017, but I think that that's going to reverse in 2018 and most certainly in 2019, because by then a lot of the laws and the Jeff Sessions of the world will have been shown to be, just an antiquated,
Jeff Sessions,
you need to go away. He just needs to go
on.
away. He needs to go
grow
away.
some balls. The horse has left the barn.
I mean, let's start with the brain first, because he's not thinking. He doesn't see.
It's absolutely ludicrous that one person believes he can dictate where where an entire industry would go, where you have 64% surveyed in America of people in favor of legalization, and 750,000 doctors out of 1 million doctors practicing in the U.S. who will tell you that they would prescribe a cannabis medicine. And so, Mr. Sessions, the horse has left the barn 20 years ago.
Well, I mean, is he a voice?
But in my opinion, Rory, if you ask me, what he's doing is, well, openly he is shaking up the industry. But if I was him, I would probably do the same thing, because what he's trying to do is make sure that none of the Obama era rules are intact, so that the federal government can write new laws. And if you ask any entrepreneur in the weed industry, it doesn't matter which state, what he wants to know is exactly where the federal government is positioned with regards to cannabis. And I think right now, with what Sessions has done, he has raised that issue into the public debate, and he will have to solve what he's put himself into, and that will be reassuring to the industry, because people will know exactly where the federal government is on stuff, and hopefully we have enough state power and state rights, which is a huge campaign promise from Trump, to allow the federal government to just legalize it, using their own ways. in the next few years. And look, in my opinion, this is a huge, huge industry. Regarding cannabis, if you want just an overall look at the industry and how to think about it, you can go to wealthresearchgroup.com and you can click on the top menu on the site. You can click on special reports and you'll see a wide array of them, including on the cannabis industry. But there's many topics like timeless investment principles, etc. And if you're looking for a constant 3 times a week newsletter that covers the big picture as well as specific opportunities, then that's what we do with the newsletter, and that's how most people choose to follow what's going on with Wealth Research Group. So I'm very happy that we did this interview, Rory.
I am too, and the last thing I want to say about Sessions and cannabis is that he is either a voice for big pharma and the alcohol industry, or he is just completely out of step, out of touch, has no clue what's actually happening on ground zero. That's the only two things that it could be, because in the way that most people see marijuana from a recreational standpoint is there's no difference in somebody getting high on marijuana as there is somebody having, a cocktail. There's no difference. And you can't legislate morality. That's what we already know. People, I can't even think of how many times that you said the illicit market that's out there that exists. That's huge, huge. That means that the laws are of no consequence. So what the states that are benefiting from it recognize that we're not doing anything except losing out. That's it. The people are already doing it. Why shouldn't we collect some taxes and be done with it? And that's
Oh,
what
not
these states.
some. Billions and billions of taxes. It will free up the prison cells. It will free up police to do real work.
Exactly.
It will help. It will help with youth programs to make sure that they know exactly, how to consume it properly. It will give quality control because the health ministry can check out, all the products that are out there in the market. It will give entrepreneurs time and real money to develop, beautiful new products with marketing and nice displays. It brings
everything.
It brings the free economy into
Right.
into the market, and nothing is good when it's on the black market.
Right. It's just suppressed. But that's what I got to say about that. Anyway, Lior, it's been great. Thank you for all your time today, and I look forward to speaking with you in the future. And folks, there's a link to everything that Lior is doing over at Wealth Research Group. And Lior, we'll speak with you in the not too distant future.
Hey, thanks, Rory.
Thank you.